focus. Ideate, innovate, enable. Enhancing tech, enriching lives, empowering India. Presented by Bank of Baroda, celebrating 115th Foundation Day.
Bank of Baroda celebrates its 115th Foundation Day this week, and the bank has a lot to be proud of on this landmark day. The FY22 results showed that the bank's asset quality is the best in 6-7 years. Also, the results show a transformation in its portfolio, in its DNA. Its retail portfolio is now growing twice as fast as its corporate loan book for the past 3-4 quarters. Its bad loans in the retail category are far lower than in other categories. Also, this has led quite a few brokerages to include Bank of Baroda in their coverage list and indeed in their buy list. So what's changing at BOB? Is it that their digital banking has started showing results? For all these questions, I have with me Mr. Sanjiv Chadha, the CEO and Managing Director of Bank of Baroda. Mr. Chadha, first of all, congratulations on this landmark day. How does it feel heading such a bank with such a large past and yet with such a young mindset in terms of their digital moves?
So thank you, Latha. It's indeed a very proud day for all Barodians. The bank was founded 115 years back by Maharaja Sayaji Rao Gaikwad, one of the greatest reformers in pre-independent India. So people may not be aware, but he was a man who actually funded the education of Dr. Bhimrao Ambedkar, who funded the election of Dadabhai Naoroji when he fought and won a seat to the British Parliament. He was the patron of Raja Ravi Verma. His Diwan was R.C. Dutt, the famous economic historian and ex-president of the Indian National Congress. And he, of course, his speeches were written at one point in time by Sri Aurobindo, not very temperate speeches, which, of course, raised the hackles of the British. So I think it's a past and a heritage with much to be proud of. And I hope that today's values of BOB actually carry that heritage forward.
We are living in a situation where the world is worried about rising interest rates. So first, let me ask about that. The RBI data, latest data shows that loans are growing at 13.2%. That's what fastest in 3-4 years. What's the experience in Bank of Baroda? Are you wanting to increase the guidance in terms of loan growth?
So I think there's no doubt that there were forces which were at work, I suppose, over the last 7 or 8 quarters. Forces in as much as that there was the corporate investment cycle, which we, of course, talked at so many times that it's ready to kick off. There was also the improvement in the corporate trade cycle, which was happening. But these developments were to some extent clouded and also postponed by COVID. So what we are now seeing is that with the clouds of COVID pretty much lifting as far as corporate activity is concerned, the underlying trends which were there, I think they are coming more and more into evidence. So I agree with you. I think there is a lot of positive which is there in terms of the loan growth momentum. And I think we have spoken before that at least till last year, the choice was between, again, protecting your margins or getting loan growth. I think this year both should be possible. We should have decent loan growth and also, again, some kind of normalization of interest rates and margins. To that extent, I agree with you. The prognosis appears to be quite positive.
Okay. So would you guide for what, double-digit growth very easily, well over 10%?
Yes, I think our guidance is that we expect the market to have a loan growth of 10 to 12%. Okay. For us at BOB, our stance has been that we would want to grow at or better than market while making sure that the improvement in margins that we have seen continues.
But if we go back to the same RBI data, deposit growth in the latest available number is only 8.2%, but loan growth is 13.2%. So would this, how does this impact bank in terms of margins, etc.?
So I think if we were to look at the system, there's still surplus liquidity, which is there about 3.5 lakh crores, right? That is still there. Also, there are a large number of banks which are still having a CD ratio of 70%, there or thereabouts. To that extent, I believe there is still slack in the system, and therefore the growth rates that we are seeing in terms of loans and deposits, they may not be necessarily working at cross purposes.
Okay.
I think if we were to have similar trends for some time, I think that's something which should be perfectly possible. But over a period of time, yes, deposit growth needs to pick up. And I think there was, you might say, a bit of a disintermediation when it came to the banking sector, when it came to savings. There was a lot of flow which was there to the equity markets. I think to some extent, a rebalancing will happen in due course.
Okay.
So I believe that currently, as we speak, because of the surpluses that banks hold, there is no challenge in terms of loan growth being a little accelerated as compared to deposit growth. And you can argue it was a long time coming anyway.
Okay, all right. Let me come to the stress that may come because of rate hikes. There's already been 2 rate hikes, and the expectation is that the repo will go to 5.5% or 6% from less than 4% just 2 months back. Will that mean more stress?
I do not believe so, because I would still believe that if you look at again in a 3, 4, 5-year time frame, what we are seeing is the normalization of interest rates. To that extent, this should not be really a matter of too much concern. Number 2, if we compare the balance sheets of corporates as compared to 2019, there's a lot of deleveraging which has happened. To that extent also, there's a lot of capacity to absorb a little higher incidence in terms of interest rates. So I would believe that whatever our sense is in terms of where, again, interest rates are heading, I don't believe that by itself should be any reason for us to worry about in terms of stressing balance sheets.
Okay. You said you can do better in margins or you can maintain margins?
So we would like to do better in margins. I think there are some trends which have been in train for some time. And then, of course, we know that when interest rates rise, there is a lag effect which would work to some extent to the benefit of banks. So I think there should be an improvement of margins that we can hope for.
One final question on corporate credit. Are you seeing it picking up? And if yes, in which sectors?
So I think the corporate credit, you might say, cycle was improving, right? So we have had brownfield projects, particularly in areas like cement, in steel, in roads, which were coming up. The challenge for us, of course, was that the pricing power was disproportionately against banks, and we did not wish to compromise our margins beyond a point. So I think the opportunities were there. I think the opportunities are now ones which we actually can take on board, and therefore we should be seeing reasonable corporate growth this year. Just also would want to point out that if we look at our balance sheet for the last year, while the corporate credit growth was muted at 3% because of the reasons I've outlined, we had the opportunity to grow again within corporate in our international book, which grew by 21%. So I think there will be opportunities, and depending on the risk appetite of banks and what are the kind of margins they're looking for, I think it should work for them. I believe the current environment works well for us.
And which sectors?
So I think we have seen, as I mentioned, the sectors are there, right? We are seeing renewable energy investments happening, steel, cement, construction. I think there's a fairly widespread growth momentum which is there. I don't believe we are there, you might say, full steam as of now. It is still something where it is there in some sectors, but I suppose it is now moving from some sectors to more sectors.
Okay. Well, let me come to the one that I really want to concentrate on, retail sector. How do you see that? What kind of pace of retail loan growth are you expecting? I'm asking you also because, you know, there are some finance CEOs who point out that higher rates and higher inflation can damp consumption demand.
So I think for us, if we were to look at last year and take it from there on, so we grew our organic retail book by about 17%. Now, within that, if you were to do a further analysis, there were segments which grew even faster. So car loans grew by about 20%. Education loans grew by 17%, but home loans, which is by far the largest piece as far as retail is concerned, grew by about 12-13% on organic basis. Now, I believe there is scope for us to actually accelerate that. And if we are able to accelerate home loan growth by a few percentage points, I think that has a disproportionate impact in terms of overall growth rate for our retail book. So I think it is something that should work for us. The second part is that there was a degrowth which was there when it came to pools, I think, which also brought down overall retail growth a little bit. So I think, and that was because NBFCs for some time were subdued. There were no fresh books that were being created, and you have to ultimately season them before they can pass on to banks. So I think that's also something that should change. The third piece, again, which to my mind should start working better, is the co-lending opportunity where there has been a change in regulations which should work in terms of this becoming an active prospect for banks and for BOB in particular. So what we have done is we actually now have middleware which allows NBFCs to connect with us pretty much seamlessly in a very, very short time frame. So I think a lot of enablers have been put in place as far as co-lending is concerned, both on the regulatory piece and also in terms of technology piece. So I do believe that there are tailwinds which are there, which will allow us to accelerate retail loan growth.
Okay. Well, actually, a lot of people I spoke to before the interview to prepare for it told me that actually Bank of Baroda's retail banking has become digital banking. So now, after this break, I want to ask you more questions on how is your digital trust, and do you see that enabling the bank to grab a larger share of the retail loan market? Those questions after the break.
Enhancing tech, enriching lives, empowering India. Presented by Bank of Baroda, celebrating 115th Foundation Day. Enhancing tech, enriching lives, empowering India. Presented by Bank of Baroda, celebrating 115th Foundation Day.
Welcome back. I've been speaking with Mr. Sanjiv Chadha, the CEO and Managing Director of Bank of Baroda, as the bank celebrates its 115th Foundation Day, a real august history. Mr. Chadha, thank you very much for your patience. Well, we were talking about how this age-old bank is becoming a young bank, and there is a lot of buzz around this Bob World. You yourself are sitting in the backdrop of Bob World. So tell us about this retail initiative, which is very visible. Something like YONO for SBI. Bob World has just come into the reckoning. Is this transforming the way you're giving retail loans?
So I think indeed so. In so many ways, as we again have spoken often enough, that COVID was in some ways a defining moment. There was some unpleasant fallout, but it also meant that there was an acceleration of trends and organizations which were able to move ahead, recognizing those trends, I think have benefited from that. So I think our digital initiative was something which, to my mind, was a part of that. So there's a lot which was already in train. So I think in terms of the last 4 or 5 years, particularly the tenure of my predecessor, Mr. Jayakumar, a lot of investment had happened. For instance, in our data lake, the technology platform is very strong. The bank has been voted as the best technology bank by the IBA the last 2 years. We had a very vibrant fintech vertical which was there. I think what has changed is that a lot of these strengths which were there inherent in the bank are now working to scale. The first piece, of course, was again this coming to bear on the lending piece. And so we actually had digital lending as a start to this entire exercise. And that's something which has played out first in retail loans and particularly in the personal loan segment. So last year itself, our personal loans actually grew by nearly 100%, and 90% of those were intermediated by digital. So that's again a very powerful force because it allows you, A, to leverage the data that you hold, to offer a wider variety of products to your customers, and 3, also again have products which actually are fairly de-risked because these are ultimately your existing customers, but will give you a fair bit of margin kicker. So I think the unsecured personal loans was the piece which was really leading in terms of that change. But now increasingly that transformation, that intermediation by digital is touching almost all parts of the business, whether it is MSME, whether it's agriculture, and even increasingly as we go forward in terms of corporate. Let us also not forget that when we talk about financial inclusion and we talk about business correspondence, that also is assisted digital. So it means that right starting from financial inclusion to wealth, there's no part of the bank which is not being touched by digital in a way which is transformative in terms of efficiencies, in terms of better margins, in terms of new products and new income streams. So I think this is a story which is going to play out for very many years.
Okay. What part of your retail lending would be now through digital?
So I think it is depends upon the definition.
Okay.
So I think if you're looking at something which is end-to-end digital, then it is personal loans which are most amenable to that.
Okay.
Car loans also to a large extent that is possible. In other areas, it is more by way of lead generation and in principle sanction, but there is no area which is left untouched.
Okay. These quick loans, 59-minute loans and things like that did create a fear whether it would lead to NPAs. On the other hand, we are told that the artificial intelligence generated from data lake, as you called it, can actually improve the quality of diligence. What has been your experience? Have you done enough of digital lending to be sure that it improves loan quality?
So I would believe yes, because as you very correctly pointed out, it is based on much better access to data, and very often data that you have on your own books. But increasingly, again, through intermediation and through partnership with fintechs, you have a lot of external data which is also brought to bear in terms of these sanction processes, which is again where you talked of PSB 59 as an example. And now the government again has launched the Jan Samarth portal, through which a large proportion of lending, which is in government-sponsored schemes, will be intermediated, where again it will be driven by data, which would mean that your costs come down, and also in terms of information quality, it is much better.
Okay.
Also, let us not forget that in terms of traditional lending, when we did MSME loans or even large corporate loans, it was based on balance sheets.
Okay.
These balance sheets were very often 9 to 12 to 15 months old when you took decisions. On the other hand, when you're taking decisions on the basis of data, which is digitally accessed, it is very often real time, for instance, GST data. Therefore, I believe it is absolutely logical that we should see much better quality of lending, much easier lending, much better customer experience, and also lower costs as we go forward.
Okay. Banks like BOB would have a substantial number of senior customers who perhaps are not very digitally savvy. Is there anything special for them?
So absolutely. I think just like in the past, we used to have special branches, right? We would have, again, a branch for maybe NRIs, a branch for SMEs, maybe even a branch for senior citizens. Now, you can actually take your basic platform, which in our case is Bob World, and then try to, again, see how you can have versions which work best, again, for a particular category of users. So we have already launched Bob Gold, which is aimed at senior citizens, where the interface is much simpler, much less clutter, and also products which actually are targeted and more useful for them. So I think this is really the first version which is away from the mainstream version which is there. But I believe there are going to be in future multiple versions which will target particular customer groups and enhance customer experience.
Where do you see this, Bank of Baroda's future? Do you see it being able to compete with fintechs? Will fintechs be an ally? Will they be a competitor? How do you see the future of the digital retail world?
So I think it's very tough, again, to at times look forward in terms of the future because the world is changing so fast. But I would tend to believe that there are some forces, some trends, which are pretty much enduring even in this fast changing world. For instance, again, the role of technology is something which is going to become more and more important. And I think the bank has a great foundation as far as technology is concerned. Similarly, again, when we look at the role of digital, the fact that it is going to be intermediating almost every activity, it is something that is going to work. The importance of talent, I think this is something which is of particular relevance, again, to public sector banks, which actually have been only suppliers of talent. I think BOB is unique in as much as it has been able to access market talent again and make sure you leverage that to the benefit of customers and to the benefit of the bank. I think that's something which is going to be very important going forward. And again, to what you mentioned in terms of fintechs, the importance of partnerships. I think the world is long gone where you can do everything yourself. And ultimately, your success as an institution and your success as a bank depends on how well you can work with partners. So I think that's something which is very important. And almost everything that we are doing when it comes to digital is based upon very strong, vibrant partnerships. And that's again, something which is going to grow more and more important. Banks concentrating in terms of what they are good at, which in some ways you can argue is going to be, again, managing regulation, managing risks, a liability franchise, right? Those are things that we are always going to be good at. But in terms of so many other things, I think it is the partnership with fintechs which is going to give you really motive force for change and going ahead. Okay.
A final question, and this is just to wrap up this rich past that banks like Bank of Baroda have. The perception in the market used to be that private sector banks are more digi-savvy. But SBI with its YONO and BOB with its Bob World are showing that, public sector banks or older banks are back in the game, as it were. And in BOB's case, you all even had a kind of a private sector interlude with Mr. Jayakumar coming from outside. And I believe he also had some lateral hires in several verticals. How do you see this? Do you think that the image of PSU versus private is now not valid and public sector banks are as digitally savvy as their private sector counterparts?
So I think what is clear is that there is nothing which really holds public sector banks in terms of technology. In so many ways, you can argue that technology is a great leveler. Also now technology is something that's available to everybody. That's something that works very well again. Similarly, again, you talked about talent. Now, as long as, again, we have the humility to recognize that all the wisdom in the world does not reside with us, I think there's a great opportunity for talent. And the kind of canvas that public sector banks provide for that talent to express itself, to make a change, I think is equally important. Third, again, I think that it is not mutually exclusive, right? At the end of the day, it is the same technology which is important, both, again, for doing wealth management in a digital manner, as also doing financial inclusion in a digital manner. And as long as you are committed to excellence, as long as you are based upon the values that are endured for so many years, I think it is possible to do both simultaneously and do both well. And I think that is really what BOB has been able to demonstrate over the last few years. And I think that's something that we are proud of and we want to take into the future.
Oh, you certainly have. A lot of brokerages are speaking about it. Mr. Chadha, it was a pleasure speaking with you and on your 115th Foundation Day. Our good wishes from CNBC TV 18 that you are able to continue to weld your rich legacy with your digital achievements. Thank you very much for joining me.
Enhancing tech, enriching lives, empowering India. Presented by Bank of Baroda, celebrating 115th Foundation Day. Focus, ideate, innovate, enable.